Hi, this is Dr. Trader. Welcome back to another Nexus Weekly Outlook. This week, two major stories collided on pound-dollar, and they pointed in completely opposite directions. The UK entered a new political chapter as Andy Burnham became Prime Minister, while John Healey moved to Chancellor of the Exchequer. At the same time, US core CPI came in at 0%, well below expectations. Normally, that should have weakened the US dollar. Instead, the US-Iran conflict escalated, oil prices surged, and the dollar attracted fresh safe haven demand. Price finished the week exactly at the weekly VWAP, around 1.3452. According to Nexus, the macro bias remains bearish, but the technical picture tells a very different story. Let's break it down. What just happened? Here's what happened. Andy Burnham officially became the UK's new Prime Minister. John Healey simultaneously took over as Chancellor, creating fresh uncertainty around future fiscal policy. Markets reacted immediately. UK gilt yields moved higher, while sterling weakened as investors questioned fiscal credibility under the new government. Across the Atlantic, US core CPI for July printed 0.0% month-over-month versus expectations of 0.2%. Normally, softer inflation weakens the dollar, but geopolitical tensions quickly changed the narrative. The conflict between the United States and Iran intensified. Brent crude rallied sharply. Safe haven flows returned to the US dollar. By the end of the week, those opposing forces canceled each other out. GBPUSD closed almost exactly on the weekly VWAP. The conflict. Here's where the story becomes interesting. Every major technical signal inside Nexus remains bullish. Daily trend SL is bullish. Weekly trend SL is bullish. Monthly trend SL is bullish. Institutional positioning from the latest COT report also remains net bullish. But the macro picture says something completely different. The Federal Reserve remains hawkish. US real yields stay elevated. Political uncertainty in the UK continues to pressure sterling. Meanwhile, geopolitical risk keeps supporting demand for the US dollar. So the market is facing two completely different narratives. Technicals say bullish, macro says bearish. That conflict is exactly why Nexus assigns only medium conviction this week. Technical picture. Let's look at the chart. Price closed the week exactly at the weekly VWAP. Neither buyers nor sellers managed to gain control. The weekly trend SL sits around 1.3419, roughly 33 pips below current price. Now here's the important part. Price has already closed above that trend SL level. Under Nexus rules, that invalidates the bearish technical structure. Multi-time frame alignment also remains bullish across the daily, weekly, and monthly charts. So technically, there is very little evidence supporting a bearish trend right now. Trade thesis. Here's the trade thesis. Nexus keeps the overall macro bias at bearish. Conviction remains medium. This is not a signal to blindly short pound dollar. The bearish case depends mainly on higher US interest rates, stronger real yields, and growing political risk inside the UK. But those macro drivers are currently fighting against price action, institutional positioning, and an all-bullish technical structure. Both technical invalidation conditions have already been triggered. That means short sellers should stay cautious. At this stage, confirmation matters more than prediction. What to watch? Going into next week, there are 4 key things to watch. First, can price remain above the weekly VWAP? If it does, bullish momentum stays intact. Second, watch for new fiscal announcements from the Burnham government. Any sign of credible fiscal discipline could support sterling. Third, monitor developments in the US-Iran conflict. Further escalation would likely strengthen safe haven demand for the dollar. Finally, pay close attention to upcoming US inflation and labor market data. Another soft inflation report could weaken the Fed's hawkish narrative. Conclusion. To sum it up, Nexus still carries a medium conviction bearish bias, but that view now sits inside a fully bullish technical structure. with both technical and validation levels already triggered. The macro story may still prove correct, but the timing may not be. And in trading, timing changes everything. Thanks for watching. This is Dr. Trader, powered by the NEXUS Research Engine at Intermarket Edge. If you enjoy institutional macro and intermarket research, don't forget to subscribe and follow the channel for more weekly updates. And remember, trade the evidence, not the emotion. See you next week. This content is provided for educational purposes only and should not be considered investment advice.